We're all here. Looks like we survived the weekend, the major storm over the weekend. Some places hit more, some places hit worse. We'll talk about the trades, the setups, the follow throughs, and doesn't look like things are over yet here. I know a lot of places are still having problems. Government shutdown looming again. Polymarket, fast market, boom, right up to 80, 90% probability for that. That's not good. Earnings this week, earnings bonanza. We'll talk about some of the big stocks, the expected moves, and then let's throw in the Fed. Why don't we have a Fed decision in on all top of this? It's a Monday. I already did. Feels like a Wednesday or a Thursday to me. Mish Schneider coming on 8:35 to talk about the Modern Family, give her views on the market. I hope everyone is awake and ready to go because this is going to be a jam-packed show on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. What happened? Lower open, they bought the dip. All the way back to unchanged. We got a double close in the S&P just above it. Weekly high just up there, too. The buck taking some heat again here, down 38 cents, just straight down after being over 99 bucks. TLT a little perky, up 37 cents. We're working on a 4-day rally. USO back at 74, flat at 74.03. Don't even need to mention gold or silver. GLD, SLV, they just go up every single day and on a pretty big percentage basis. Silver, SLV being the champ today, up 5% here. Moves so fast, I can't even quote it. Bitcoin being left out in the cold. That's the only thing I can say about the Bitcoin market here as we move into the last trading week in January. Just a quick note, these charts are brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. We are going to be having some TradeStation personnel guests coming on the show next month to help unlock all that value in the TradeStation platform. So let's go to the Iceman. And I'm not talking about George Gervin. I'm not going to ask you if you remember George Gervin or not. But hey, Dennis, how you doing today?
Doing good. Yeah. The funny thing and the most ironic thing is, like, half the U.S. is under an ice storm here. I'm under a permanent ice storm in Georgian Bay. And today is a normal day. School day, buses are running. We hardly got any snow. It was like the least snow we've ever gotten over a weekend. I think we had maybe 4 or 5 inches. Normally we just get a foot. So yeah, everything is running smoothly up here, but not so smoothly in other places here. Bring the Brentster in. How is the D?
Good morning. Detroit is, what do we get, Joel? We got maybe like 4 inches.
Very disappointing. I mean,
it was definitely really cold, but
it was disappointing for you, but a lot of damage farther south. I was looking at videos over the weekend, and it was reminding me we had the ice storm up here back at the end of March, and the trees down, the accretion, that's what we were warning about, was the fear. I know Mississippi got hit hard. There was a lot of states, obviously Kentucky, Texas never sees this kind of stuff. So, a million people without power, it was definitely, not a nothing burger for a lot of people.
Saw a CNBC report that damage from the storm estimated over 100 billion, about 100 to 115 billion. Thanks for Michael for providing us with that little data point there. You guys want to get into the winter storm trade here?
Yeah, I think we start right with that. And obviously, this was an anticipatory trade that we had been talking about for the last few days. Chris Brecher was talking about it Tuesday of last week, and then we started getting on it Wednesday or Thursday. I did go along GNRC. I did go along some of the natural gas stocks, thinking that, we're probably going to pop up, especially with the cold weather happening there. That trade worked very well overnight. You could start with GNRC if you want. That stock is trading up $1.50. It's trading up 176, so kind of in this range all night. I sold the overnight portion. I still kept a swing trade portion on. We will see. A lot of people still without power, so I'm not completely out of the trade here yet.
Okay.
Also EQT, which is a natural gas stock, getting a good lift. I had that overnight along with RRC. I'm still in some RRC, but I did get out of the EQT. So definitely some of the ice storm trade working. Didn't go as far as Home Depot's or Lowe's here, really. We're seeing Lowe's trade slightly higher in the pre-market. It depends on damage, but it's a lot of trees down. I didn't see a lot of buildings destroyed. I'm sure there was a few, but it's going to be more cleanup. But the bigger issue is that the cold weather is going to stick around for a bit. So it's hard to go clean up all these trees that are down and get the power back when there's still ice on the trees.
And what happened if you were tracking the storm yesterday is like a thunderstorm rolled through the south, basically. Like a lot of rain, like we had all this freezing rain, like a actual storm like came through, and that kind of even went up into the East Coast. And then we're getting this system that is going to be coming up from the south here this week. So there's a chance for another storm later this week, but I think you had a good thought there, Dennis. I mean, it's going to remain cold in at least the Midwest for some time. Dennis, the other thought that you had for this trade was the insurers and the reinsurers, and you said that one kind of didn't really play out over the weekend,
I think
right?
damage was 100 to 150 billion. Doesn't sound fun, but that's not catastrophic for the insurers here either. We're not really seeing much. I mean, you got the reinsurance plays that we talked about there. You could look at an RNR. Hasn't really traded this morning. I am still short a bit of EG. That was Everest Regroup, but I'll be covering that sometime this morning as well. This is it didn't really get hit. Your bigger insurance like Chubb and AIG Travelers, not seeing much action on them at all. So I don't think it was, catastrophic to the insurers, not like a hurricane going and flattening everything, but there's definitely the major issue was the power outages here. And obviously, we're seeing natural gas with the cold weather supposed to stick around for a bit. We're seeing UNG up again, natural gas prices up again. EQT, like I said, RRC, some of the natural gas stocks. LNG is another one. AR is another one. If you're looking at them, they're all trading higher here this morning.
Yeah, I mean, I think overall, it's maybe not as bad as expected. I mean, it's not over yet as far as the damage. I think you would see that more reflected in the insurance and the reinsurers. The big stock, GNRC, it's up $1.49. I just want to look at the daily here. And a lot of times into the event, you see a spike into the event, and then depending on the outcome of the event, it kind of hangs and then could, may pull back. You did have that spike high on Thursday over 180. I think what traders should focus on here is the high close of the move, right? That's where the mark is. And that's at 175.24. That was your close on Thursday. You did trade above it in the pre-market. You're below it right now. So I'd rather be focused on that level than, if you want to try and get out of 181, sure. The other thing I just want to mention is that this is not going to show up in there. I mean, this is all anticipation. This is all of the event, right? If you're running out to Home Depot or you're buying your Generac, okay, it's not getting installed tomorrow. It's not being put on the books. So maybe what we need to do is go wait, next earnings report, right? And have this. This is hype. This is, anticipation. These are trades that have worked in hurricanes. But, if you want to see what the true material impact is on earnings, and then we got to wait another 3 months, right? So
Sometimes that trade works. It worked with the Netflix with the Tyson fight. And remember we played that? I'm like, they're just not thinking about it. Like the markets, was anticipating. It was one of the few times I actually went long a stock intentionally in earnings. Bought the close intentionally to take it to earnings because like the subscriber numbers are going to be through the roof. They had outages for crying out loud on the Tyson. So obvious stuff. I mean, do you buy a Generac ahead of the earnings, saying that a lot of people probably went out and said, I'm getting sick of this and I want to, not have my power out? I think it's probably not a bad call. We'd have to look at when those numbers actually go into the earnings report there too. But then guidance, I mean, they can guide higher as well. It's a stock that's reasonably priced. I mean, we could do a fundy on Generac real quickly here. And that's why I was like, I put it on for a swing trade, but sometimes my swing trades become long-term investments too. If they, look like they're working, like you never want a swing trade to become a long-term investment because you don't want to take the loss. But sometimes if it's going your way, you could just hold on to it. And it's like all of a sudden you get more comfortable with it. I mean, it's only trading 20 times forward earnings. It's not an expensive stock. probably was more attractive, the 140, 150. The stock really didn't have a great year simply because we didn't have a lot of hurricanes. So Generac does really well in hurricane season, and it was a very light year for hurricanes. So now all of a sudden you start thinking about it as an ice storm trade too. That's another potential catalyst because we never really thought about Generac as an ice storm trade.
Sure.
All right. I guess we're keeping with the ice theme here, right? And events, political events happen, over the weekend. Unfortunately, we did have an event in Minnesota. We all know about it, so we don't have to talk about the event. But what we need to talk about is the impact on the government shutdown, right?
Well, yeah, and I mean the events was tragic. Nobody wants to see anybody get shot. Very tragic. Whether you're, you had a gun, whether you didn't have a gun, all of this, you just don't want to see people getting killed. So the market is voting now that there's going to be an issue with trying to get obviously Homeland and ICE funding here. And look at the poly market and bring it up because it was government shutdown wasn't on anybody's radar on Friday. This exploded higher. We went from a 9% chance of a shutdown on Friday to today is an 80% chance. This is all the events that happened in Minnesota. People, are very upset. Obviously, lots of protesting here. And we're assuming that this is all because they weren't going to, this entire move is because of Homeland and ICE funding here. So that they're going to fight that. So 81%. So we had a government shutdown already with the markets. Didn't seem to matter when we had the government shut down. Well, how long was it, Brent? Like 45 days or something? We were shut down for a long time, 3 months ago.
Yeah.
So it didn't seem to affect the markets at all. So why does it affect the markets this time? I think that's why the S&P initially dips here overnight, and they just buy the dip anyway. They're like, wow, we went through a shutdown already. What's it matter? I think we're back to that again here. I mean, Goldman came out with some stuff, with GDP going to get hit, but we really never saw much of an impact, at least not yet, from the government shutdown. So I'm not sure it's going to happen here either.
Okay. All right. As you can see, you got the reaction here in the poly market. We'll see what kind of talks come out, what comes out of Washington on this. But there you go.
And then the other big news,
which it was a quick move.
Yep. And the other big news was obviously Trump escalating against Canada as well. Announced, late Friday, I think it might have been Saturday morning actually, that if Canada does a deal with China, he's going to slap Canada with 100% tariffs. So tariffs coming back again. Trump's obviously not pleased that Canada was talking with Xi, and there's obviously tensions rising there as well. So there's lots of things again for this market to worry about. Lots of reasons for the S&P to sell off last night when we opened at 6 o'clock. But we know this market is just resilient, loves to climb the wall of worry. It's exactly what we saw again. They cannot stop buying the dip. The honey badger market continues. And I mean, as a trader, you just got to read what's happening here. All of a sudden, government shutdown, more, tariffs, with the Canada situation, huge ice storm with, a lot of people out of power. And the market says, so what? That's what it says. And the market starts to go higher here again.
Honey badger.
So, I mean, you got to trade the market in front of you. You can say all these things. Oh, eventually the market's going to price all this stuff in. Maybe it's going to be right. But right now, the buy the dip mentality is still alive and very well.
All right. Our top corporate news item, I would say, from over the weekend was on USA Rare Earth, USAR. We're going to get to that in just a sec, but let's take a little break here and let's do some early morning ratings. Why not? I'm going to pull up our fly banner here, and Triple D, if you had a few ratings highlights from over the evening, I'll say thanks to Fly here, our sponsor for pre-market prep. Fly on the wall with their new Pro platform, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new Fly Pro platform with AI-powered company analysis and unique KPI charts for deeper insights. There's a QR code on screen right now. You can scan that QR code and you can get over to thefly.com to learn about their nice new platform. Triple D, what were a highlight or two from ratings?
There was a couple here. Obviously, when you have a macro-driven day, ratings take a back seat, but we'll get to the couple that I did have on my radar. Needham upgrading app 11 to buy. a contrarian call here, and I always love my contrarian calls because the stock has been trading in the gutter. Obviously, we know software names have had a really rough start to the year. While Needham's coming out and saying this is a buy, they're putting a $700 price target on it. APP. If you have color, Brent, you can give it to us here. The stock is trading up 12 points here in the pre-market.
If you have it, Triple D, go for it. I'm pulling it up on my fly here still.
So analysts, we upgrade app to buy, establish a $700 price target following additional work on e-commerce, giving us more confidence in the trajectory of e-commerce revenue growth in 26E, coming at the same time the stock is pulled back off the highs a month ago. So, they're looking at the dip. They're buying the dip. I mean, we talk about buying the dip. Well, here's an analyst coming in and buying the dip on app 11. Thoughts, Joel?
It got a quick pop over 540, so that's gonna be my number of the day. We're trading below it because your 2-day high is 539.86. So room up to 540 here. Bulls get a hold of it, keep going. There's definitely some room on the upside, but get it going in the right direction. We'll see if we can take out the pre-market high, work our way towards 550.
One other rating that I did want to cover was Cisco. That is getting upgraded at Evercore here. They see plenty of tailwinds. So if we jump into the note here on Cisco, oh gosh, there's so much. Stock remains attractive at under 20 times PE versus its large cap peers. And they raised the price target up to $100 from $80. So that's a big price target here, talking about $100 because Cisco has been slow and steady. I mean, obviously, this has been a terrible long-term investment if you bought it back in the year 2000 because it was $80 back in the year 2000. So here you're 26 years later, and the stock is still, it did kiss a new all-time high just last month, but it's still, basically up nothing. Now, I mean, if you bought it 10 years ago, it's not been bad, but, long-term, this has just not been the stock to be in. Joel, what are your technical thoughts?
Quick technical, double top at 76. You're above that. The 50-day at 76.50. So that's your target area. This is a big move, right? Cisco, it's traded pretty good volume. But we'll see what happens. That 76 to 76.50 area. I think that we have a ratings on USAR, right? And that's the big news.
So not a rating on USAR. We had some major news here with rumors, and this has not been confirmed here.
I believe it has been.
It has been.
It has been confirmed. Yes.
Okay. So it started with, I believe, a Financial Times article.
Okay.
Then, go ahead, Brent.
Yeah, so here is, and thanks, Dennis. I was trying to track down the original report. You're saying FT, that's good. Company did confirm at 7 a.m. this morning a letter of intent with the U.S. government. I'm just reading from the headline here for access to $1.6 billion in funding to accelerate domestic heavy rare earth value chain, etc., etc. A little press release here from the company. Stock is off to the races and bringing the entire rare earth space higher, bringing the entire, we could argue, lithium space higher. Even though we have a ton of price action in gold and silver, it seems like lithium plays are also moving higher here with this important news for rare earth stocks and USAR specifically.
It's a huge move. Last night it was limit up. So limit up on IB in the overnight session and Robinhood is 20%. So it was limit up last night, bid at 29.50 all night. And then she opened and she got a lot higher than that, Joel. I mean, this thing kissed $40 here at the 4 o'clock open, which is just silly town. It's come way off. And again, if you're waking up at 4 a.m. to buy a stock that's up 80%, there's a very good possibility that you are doing it. Sorry, because I'm getting sick again. You are doing it backwards. Don't wake up at 4 a.m. and pay up 80% for stocks. You're instantly down. So here's a great story of the day. Somebody buying this thing up at $40 last night is stupid. That's my rant.
That was a quick one.
Yeah. Boy, oh boy. So we've come in 10 points. I think it's something like this. I'll just focus a little bit more on a shorter term chart here, the 15-minute chart. We came in under $28. So that's been the rebound or the low, 27.50. So, as long as it stays above 27.50, Bull's still in control here. Now on the way back up, man, you have people that are questioning their 4 a.m. purchases here, have targets in this area. I mean, if you wanted to sell in this rip and you're lamenting that you didn't get 40, see what they, see where they nibble. See if they'll take you out at 30, maybe for a little bit. See if they'll take you out at 31. See if they'll take you out at 32. Just nibbling to
The
see
person who bought at 40, because it's somebody that's obviously probably a retail trader that's waking up at 4 a.m., will never sell at the loss. They will hold it forever and ever and ever until it comes back. This is the problem with so many traders, and this is the problem with everyone. It's just loss aversion, behavioral finance, right back to it. People do not sell at losses. They don't want to do it. This is the difference between me and a lot of unsuccessful traders, is that I take losses all the time. I am wrong all the time. I admit I'm wrong all the time. You have to be wrong. There are so many traders. I've never had a loss before. I've never taken a loss before. Eventually, with that strategy, you will have a portfolio of losers. You inevitably will end up losing. Like, there's nothing 100% for sure, but if you are absolutely unwilling to take losses in trading, eventually you will get the wrong stocks and you will be full of losers in your account, and it will dwindle away your account. So if you can learn anything from this entire episode of Pre-Market Prep, it's cut the losers here. That person who bought at 40, I bet you will never cut the loser.
Next, RVMD.
Well, next headline.
RVMD, Revolutions Medicine, a company that had been rumored. Reminder here, a nice rumor here. Triple D obliged giving us this reminder that AbbVie had been in talks for this company a few months ago, and now over the weekend, we're hearing Merck got involved in this. We're hearing that Merck is no longer in talks to acquire Revolution Medicine. The stock trading down, RVMD trading down like 20% here this morning. Merck is kind of quiet on it. AbbVie, I haven't looked at AbbVie here this morning to see if it's reacting. It's not really reacting here either.
No, my commentary, though, like to you guys in the pre-market is, okay, this is an interesting one because the Merck deal's dead. They punished the stock. It's down 20% as it should be. But we got to remember that Merck wasn't the only suitor here. It was AbbVie was interested as well. So all of a sudden, if you're trying to buy a company, think about the way Trump negotiates, with art of the deal. If you're like, can't get them to come to the table, can't get them to take my price, you know what you do? You pull the deal. You say, we're out, we're done. Forget it. We don't want you anymore. Maybe it stays that they pulled the deal, but it also could be some art of the deal here too. Maybe Merck comes back to the table. Maybe they just wanted the stock to take all these RVM. Imagine being an RVMD executive. You're like, crap, man, we're down 20% right now. Now what? Now we were supposed to be taking out. We were trying to get extra $5 on a Merck. Now we're down 25. What do we do? Oh man, we'll call AbbVie. Maybe they're interested again. Maybe go over here. Well, let's see what's happening. Are you guys interested? Well, I don't know. So I don't think imminently they're going to come back to the table. But I think there's the possibility that this deal could still get done. This could be a little bit of jockeying here. So I don't totally think this deal is dead. So am I interested in buying the dip? I am. I didn't buy the dip yet, but I'm interested because you had two suitors. There's still, obviously have been a lot of run up here. So if deal doesn't get done, you look at this probably back at 80 where it came from. But I mean, as you get down to that price, you start thinking, well, this was trading at 80 before there was any deals on the table. You could say, oh, well, maybe there was rumors before that, but really it started blasting off when Merck and AbbVie were fighting for it. So that's my thought process. Is I'm actually interested in buying this dip. I haven't bought it yet, but I'll keep my eye on it.
I'll talk both sides of this trade here. The first side, staying with Dennis's theme of, hey, where are we going to come in and buy the dip here? At this point in time, this is where we're trading. We're trading right at the $94 area. What you really like to ultimately see is, where was it trading when the news hit, right? Right now, it doesn't look like it's going back to $80. So that's kind of signaling to you that people maybe are having the same kind of thoughts that Dennis that are having, like, yeah, maybe there's a possible deal here. That's on the downside. So I think if you're sticking your nose out here at 93 and no one gets interested again here, your risk could be down to $80. I just want to take the flip side of the trade. And man, when you get deals and you get rumored deals and people come out and they, hey, we're buying this and this is it, and another day it doesn't get confirmed, doesn't. A lot of times you can ring the register, and a lot of times that's a prudent thing. It doesn't always work out that way. But you had several days after it came out, it hung at the 115, 120 area. So sometimes getting greedy and not waiting, perhaps you could have put your assets to work somewhere, a little bit better. So there's the flip side of of course, someone can come in and say, yeah, we're going to pay 1.25, 1.3, 130. But at this point, Merck said, not good enough for me. But looking at things off the initial doesn't always work out that way, because I know I wanted when CoAmerica got taken over, I was like, oh, I got to get out of this thing. I don't want to get any more. And I said, you know what? We'll see. We'll see what happens with the market. It's still moving higher, and it's actually moved up another 10, 12 points. So doesn't work 100% of the time, but it's a good thing to keep an eye on longer term.
We should get
All
the
right.
CoreWeave news here too.
Okay.
So
CoreWeave news,
CoreWeave,
right at 8 a.m. Nvidia and Coreweave strengthen their collaboration to accelerate build out of AI factories. Going to be investing, I think, a couple $2 billion here. I'm opening the press release here. Nvidia has invested $2 billion in CoreWeave Class A common stock at a purchase price of $87.20 per share. The investment reflects Nvidia's confidence in CoreWeave's business team and growth strategy as a cloud platform built on the Nvidia structure. CoreWeave shares are trading up $10 here, following this news item, which hit right as pre-market prep was starting.
Yeah, huge move here for CoreWeave. I mean, the Nvidia headlines maybe start driving the bus here again here, but $2 billion is going to rip the stock higher. It's the right company, and it's a big amount here for CoreWeave. Stock lifting. We've seen these rips get faded before here. CoreWeave has not really faded here, so it's still going pretty well here this morning. Obviously, you can look at your other stocks and move along with those. CORZ, which was a stock they were going to take over at one time, is lifting as well, but this deal is directly to CoreWeave, so it's the beneficiary. Joel, what do you think about the technicals?
Let's find a bar, one bar to focus on, and the bar is going to be right where my cursor is here in the middle of the circle here. That bar day was had a high of 110, a low of 102.78, and a close of 105.61. Next day, you dropped to $88. If your plan was for a gap fill here at this area, well, there it is, folks. You're getting it on the news. I just think you're getting tough sledding here between this area going up to 110. So nice pop, has not faded yet. This is kind of, what we've seen before with the companies kind of scratching each other's back and, deal with deals. So we'll see how it pans out.
Let's talk Sarepta. Sarepta with a little news on Friday. And Friday, they said that they are going to host a press release. They're going to host a webcast at 8:30 a.m. this morning to go over 3-year results from their Elevidys trial, which has been huge for Sarepta. So the stock traded up a good like $3 on the news that the company was going to do this webcast. Now, the company this morning has come out with a press release disclosing the details that they're going to go over on this webcast, and the results were favorable for the 3-year Elevidys trial. But Triple D, why would the stock trade up on Friday with the sole disclosure that they're going to have a webcast on Monday at 8:30 a.m.? You have any thoughts?
Well, you were talking about this, Brentster. So, I think you made a really good point. You were giving this on in the STN room, that usually when you're coming out with something like this, it's probably to say good news and not bad news. Because you were saying maybe if they were going to say bad news, they would just drop the bad news. But when they're coming out with a webcast and making an event of it, it makes you think they're going to have good news. Is that kind of what you were thinking?
That's kind of my thought.
I think you're right.
Somebody did a study years ago about the timeline as an example for earnings. If a company gives earnings earlier than expected, if company gives earnings later than expected. It's kind of like the human thing to go like, what do you want? You want the good news first? Or you want the bad news first? And a lot of times people say, I want the good news first. So is there some similar psychology there for in the case of Sarepta? Yeah, I think so. And the company kind of indicated that thought because we did get the data here this morning. Let me read you from the press release, which hit right at 8 a.m. Also, as pre-market prep was starting, Elevidys achieved mean North scores above baseline 3 years after treatment. There was no new treatment-related safety signals that were observed. Everything, as far as I can detect here in this press release from Sarepta, is positive, and now the company is going to have a call here that just actually started about a minute ago, folks.
Joel, what do you think of
Nice
the
pop.
technicals in this one?
I mean, there's a nice pop. I mean, 24.50. I mean, it's that was the high, and you pull back. I mean, this company has just had a lot of bad news, and you got to look at these stocks. A lot of time, it's news cycle, right? And it's had just a horrible news cycle for months, for weeks, and for months here. Long consolidation. Are they going to be able to turn the news cycle? I don't know. Adam Fierstein probably knows a little bit more than me, but they are coming out, and there is some positive talk. A lot of overhead supply on this one. We'll see what they say, but I mean, can they turn it with one report coming up with 3 years worth of data? Got to be skeptical here. It is trading up $1.14, but man, there's a lot of people waiting for the stock to get back to 30, get back to 40, get back to 50, get back to 60. So we'll see if this is a big enough catalyst here for Sarepta.
One more news item here, and then we're going to go to Mish Schneider from MarketGauge. She's waiting in the background so patiently. Thanks, Mish, for that. So Intel, let's talk Intel on Friday. Intel on Friday at 4:44 p.m. A filing hits on Intel. It's a Form S ASR. That's what the form is called. The form is for an automatic shelf registration. That's what that ASR stands for, automatic shelf registration. So Intel filing shows a shelf offering, which means that they potentially can do an offering. I like to think of a shelf as they're putting this offering on the shelf, and if they want to utilize it, they can grab it off the shelf and use it, basically alerting investors that they could do an offering. But the automatic shelf, folks, this is important. This means that it continues filing each year, or actually in the case of Intel, every like 2 or 3 years, they have this automatic shelf that just refiles. Does not mean they have to tap the offering. And we have not yet heard from Intel if they are going to do an offering. Did the stock move on Friday on this? Not really. We were kind of watching it. I haven't looked at the chart here this
Well, it
morning.
started to leak. So, I
Started
mean,
leaking a
obviously,
little.
Friday was an awful day for Intel. They had the earnings, disappointed. The stock opened and just tanked and closed at the lows of the day. It continued moving a little bit lower, kind of hung out, but then they announced the shelf. Stock didn't respond immediately, but we were very cautious with it. We're like, I don't know, I wouldn't want to be long here because what if they do come out with an offering? I think you're at this point, their investors are selling first and asking questions later here now. I mean, the conference call going back to Thursday was an epic disaster. They're talking about, nothing happening really till 2027. And the investors are impatient. I mean, we're in the most impatient market that we've ever been in. This is a market that wants immediate gratification on everything. And you're talking about 2027, waiting, on this business and trying to invent themselves here. Investors just aren't waiting around here. Now, we do have the Trump administration behind this stock. U.S. government behind this stock is important. So I do think eventually that dip gets bought, but I don't want to be a hero and catch the falling knife here. So I'm going to wait until, I start to see some type of a base or something before trying to be a hero on this trade.
My initial reaction was 700,000 shares, right? And I look at a stock that trades. How much did it trade? It traded 200, almost 300 million on Friday. So I look at that as like, well, 700,000 shares, you could probably get that mopped up pretty quickly, unless you put a market order in on the open today. Oh, it's 700. Yeah, 700 million. All right, 700 million. Why did I say 700,000? Okay, that's different. 700 million. That's a hell of a lot different. I want to be trying to pick a bottom in this thing. Going into the report, I mean, there was such, you talk about high bars. You had the highest bar in the world. It did it, it was okay on the EPS. I don't know where there's a bottom in this thing. It's just such a ridiculous run. Even not even going back to 25. Look at that move from 35 to 55. Now you're at the $45 area. I'll have to agree with Dennis here. Like, let it stop going down. Make a couple lows in the same area. Maybe the volume come up a little bit lighter, getting people out. But someone bought this thing on the way up and they want to get the hell out. They probably wish they would have done it before the report.
Are you guys ready for Mish?
We are.
Let's do it.
Let's go get Mish.
Mish Schneider, Chief Market Strategist over there at MarketGauge, joining us on pre-market prep. Mish, how you doing today?
Doing good. It's good to see you guys. Dennis, especially you, because I don't think you were on the last couple of times. You were vacationing or ill. So good to see you.
I think if you're in the STN room, after 10, I'm on from 7 to 10. So so after 10 o'clock we run with Joel. So I wish I could host 24 hours a day. I think everybody gets sick of hearing my voice though. So we give a break. We like to hear nicer voices like yours, Mish. So anyways, Mish, I mean, how's it going over there? I mean, you're working on a lot of things. I know you've been working and doing a lot of stuff over at MarketGauge here. What's new? Talk to us.
Well, let's see. Where can I start? Yeah,
I'll start with earnings. Earnings in the market reaction, because we have all these different things going on, right? We have ice storms, which you don't have to deal with. We have geopolitical tensions last week. Forget about that. We have things going on within our own country, right? Forget about that. Buy the dip off the open. But focusing on earnings, talk about earnings so far and the market reaction.
Well, let's start with, obviously, if we're going to go Mag 7, since this is a huge week with Apple and Microsoft and Tesla reporting, and we had Netflix last week, right? So I don't know if we can call that any kind of precursor to what happens this week with the Mag 7, but the earnings weren't bad, and yet the stock fell anyway. So it could just have its own issues. Obviously, the deal with Warner Brothers is a big thing. They want to go all cash. Maybe that's a mistake for them. They are not going to do corporate buybacks. Maybe that's a mistake for them. So, what can we take away for this week for these companies is, we're going to look at CapEx, right? How much more money can they spend? We just saw the big news this morning about Nvidia and Coreweave. So these companies are still spending money. There was news even with Microsoft. And so I feel like right now, so much of the great news in the whole Mag 7 and even some of the big guns, as far as the tech stocks go, are so baked in that it would have to be something extraordinary to get them to explode much higher from here. So I think it's good to pay attention. Really, the only one I'm interested in right now, by the way, is Microsoft, because it had a really nice bottoming pattern and it's been undervalued compared to the others. But I'm not so interested in that. There's so much more fun going on in this market right now.
So your outlook, let's go to your 2026 outlook and speed, volatility, rebellion, and bold move thesis. I wish you weren't so right, Mish. 1 month into it, AI memory bottleneck, rebellion looking geopolitics. I mean, we're only 1 month in. Did you expect it all matriculate so quickly?
No, I did not expect it to happen this fast, but nonetheless, we were positioned for it. So we're happy, right? I mean, we already knew gold and silver were not done, even though so many people that I have tremendous respect for keep calling for the top of those markets. And I'm not sure why. Is it an ego thing? Are they looking at something like with waves? I have no idea. But if you step back, you can't be bearish at this point. That doesn't mean we can't have a correction because of everything you just mentioned, all the volatility and the geopolitical situation. So that's number one. And then, of course, oil now. I think oil may have bottomed. We're looking for it to hold $58 a barrel. Right now, it's back over 60. It's down a little bit pre-market here, but we've got Iran sort of circling behind us as well in terms of geopolitical news. And then the weather, as you mentioned, right? Obviously, that's for natural gas. We bought natural gas a week before even weather announcements were coming, simply because it looked like it bottomed. I mean, we had a double bottom in Boyle. We were looking at Boyle, so we bought it at like 1660. It's trading at 31, or at least it was last I looked. I mean, this is, you have to, this is a market where the commodities have been signaling something for a while. And even though there are a lot of stocks that have done well, this has been sort of buy things, like you say, on the dip, where you have a good risk if you're wrong. And then if you get one of those parabolic moves in stocks, probably a good idea to take some off the table. In commodities, I think maybe we're just getting started. And this is all because of everything that's going on around the world. So that's how we've been playing it. I can get into more specifics with our quants, because that's kind of interesting. And then what I'm doing here with some of the discretionary. But the last thing I want to say, and just in terms of the whole backdrop, is there is a definite glass half full, half empty attitude. There are people, very, very smart economists or market strategists from different big firms, that feel that everything that's going on right now is all for the good of America, right? The Greenland situation giving us access to shipping routes and roles. The Iran situation, basically trying to get rid of a bad regime. Now that same talk about Cuba. The onshoring, bringing the tariffs, that money coming in, giving people more money to spend potentially with tax cuts or possibly more types of incentives. And then, of course, the Fed and that whole big thing, and trying to get the interest rates down. People think, oh my God, this is the greatest thing. It's deglobalization. This is what we should have had all along. That's the one side. And then the other side is there's a million things that could go wrong with that. So I think you're kind of like, you have to dance that dance right now. And Dennis, I heard you talking about being able to take a loss. My God, I mean, that's just fundamental trading 101. People that are getting killed.
They don't do it, Mish.
Yeah.
I mean, that should be probably, and I know you teach a lot of like early stuff, so you teach us all the time, but that's going to be like the first lesson, is like willingness to take a loss. Because if you're not willing to do that, it's funny, like just going back, and this is an important conversation itself, is like when we started at the Bright Trading Office, and I started, trading, and I didn't know what I was doing. After I was there for 3 or 4 years, though, in the office, I couldn't tell which traders were going to make it, but I could immediately tell which ones weren't. Immediately. Yeah. Like on day one, I'm like, that trader's done. They have no chance. Because one, it's all about like, well, the market's cheating me, this is not, like it's always the market's fault. But the two is the unwillingness to take a loss, the doubling down on losers. It's like natural tendency, double down. Oh, I buy more, I buy more, I buy more. You knew those traders were dead right from the get-go. Like on day one, I'm like, you almost should have that conversation. This business is not for you, because that is like ingrained. It's a hard thing to teach. But if you're like just like stubborn and not willing to admit you're wrong, you're just dead. You're dead in this game. I mean, as an investor, maybe that can work if you're really good at picking long-term trades and you're holding on. But, as a trader, Mish, I mean, you're so dead.
Well, they hear things like Druckenmiller says, it doesn't matter your timing. You could look at something 2 years out and you'll find. Well, that's great for somebody like Druckenmiller, right? Because he's a billionaire. Sure. But most people getting started are using not even just discretionary money, but maybe some of their life savings. And so, you can't think like Druckenmiller. But, I wanted to add one thing on the floor, which we all have floor experience. They used to say, is the market is your best psychologist. And I think that is the truest thing I have ever heard. So you really learn about yourself very quickly when you're in the trading game. And if you're stubborn, or you are into pain, or you don't feel confident, so you figure, oh my God, something's gone in my favor, I got to get out right away, and you don't know how to ride a winner. There's so many ways that this is a metaphor for who you are as a person and how you should live your life. And I think that people should really understand that they're not just trading and the market doesn't owe them anything, but they have to look in the mirror and say, what does this say about me?
Psychology of the market's very important. Just want to get quickly here. We got a few minutes left. Get into rotation. Oh, it's just a Mag 7. We need these other stocks. We need the Modern Family to pick it up. Well, we get the IWM cooperating here, but now some of the other sectors of the Modern Family are starting to show some weakness. Put it all together for us, Mish.
Well, one of my favorite things that we do at MarketGauge is we look at calendar ranges that are set in January and July. So it's the first 10 trading days of January. You get a high and you get a low. So that's a really, really good way to get the health. So last week, all of the Modern Family went through. Well, not all of them went through. Pretty much all of them went through the January 6-month calendar range high and then failed it, particularly transportation and our good old granny retail. Also regional banks, let's throw that in there. And then IWM also went through the January calendar range high, stayed there for a little longer, and then on Friday, and now as it's coming in today, is back below. Is that a failure? It's only a failure if we can't get back above it, or now we break down under the January low. And if we do that, that's probably a really good danger sign. So what I would say right now is be frosty, be cautious. Don't put that much capital to work in those major areas right now until we see the strength come back over those January highs, number one. And number two is if it starts to continue to roll over, definitely be frosty and put those stops in so you don't turn into what we were just talking about, a loser. And now all of a sudden you find yourself down 20, 30% as you're getting into February. So that's really what it's telling me is that, yes, there's the optimism is still there with everything I just mentioned, the glass half full. And of course, we want all of this to succeed. But we've got, that good old gold crack mirror showing the cracks. And now we've got the other commodities perking up. You got to really be aware of what's going on.
Cautious. Yep. Let's go into a couple stock-specific names here,
Okay.
pressured names, CrowdStrike, Palantir. We've had some biotech dips here. I mean, look at the opportunity in this versus the risk. Let's keep it to CrowdStrike and a crowd favorite, Palantir.
Yeah, well, but Palantir looks a little weaker than CrowdStrike right now. We did get some buying last week, but it didn't really get any kind of follow through. So if you look at CrowdStrike right now, you can see there's a tremendous amount of support there on the chart at around that 440 level, but it still has some work to do. I really like it. We bought a little taste of it. We didn't buy a full position. So we'll see what happens there. We haven't touched Palantir. Palantir was a stock that we made a lot of money in 2024 and 2025. And people think that things go up forever. But even though these aren't commodities, they're actual stocks, nothing goes up forever. And here's a classic example. However, with that said, cybersecurity is also something that's been all of a sudden not talked about very much. And I still think that if people want to do something dangerous to the United States, they're not going to throw a bomb at us. They're going to do what we're already seeing, not buy our bonds, not buy our dollars, and then have some kind of a cybersecurity strike. So although we seem to do it to ourselves, that's what happened with CrowdStrike. And I'm so glad you put IBIT up there because I didn't want to leave. Oh, let me just say a word about biotech. I think the most interesting thing I can tell you about biotech is not what I've done discretionarily, but what our models are doing. So our models right now are accumulating in the mid to small cap earnings model, getting out of all these little small retail stocks it had that have all done well, like American Eagle and Boot and Macy's, a couple of education stocks. And you know what it's buying right now? All biotech stocks, small biotech stocks, number one, and Victoria's Secret. I thought, wow, how'd that get in there? But so there you go. So I think biotech is really, really hot. Look at the Victoria's Secret. I mean, not sure why they're getting in. Obviously, they use a trend strength indicator. So it must have a very high indication there in terms of its momentum. But the bigger point to me is the fact that biotech is really getting a lot of interest. We're in, from a discretionary standpoint, Replimune. That's probably my favorite right now. That got an FDA approval earlier this year. It went over 10, dropped all the way back down to around 650. Now it's back trying to get near 8. Look at biotech. Again, watch those January calendar range highs. So this is, between commodities and biotech has been my biggest focus. And then the other thing that I really still like here, how could you not, is anything related to the vanity trade, right? Novo Nordisk looks amazing. Eli Lilly's been doing well. There's Elf formed a shelf. So if you just stay thematic, I think you're going to be fine. And the last word, of course, is about Bitcoin.
Talk to us about Bitcoin. Consolidation, not moving with the metals, kind of has a mind of its own. Consolidation station. Final thoughts on Bitcoin.
Well, first of all, I'm not looking at Bitcoin. I'm looking at Ethereum. And I've been looking at BMNR, Bitmart. And I really, really think that what's happened is it kind of reminds me of silver in 2023. The people were trying to bring it down, push it down, sell it off. But the fundamentals really still look strong. I think the fundamentals are there. I'm not sure why all this selling is happening, but I'm excited because it's giving me an opportunity to get into something I think relatively cheap. Ethereum, I can't imagine it's going to break down under 2,800. And as soon as it gets over 3,000, then it confirms. Bitcoin's having its own issue, but Bitcoin is not necessarily my favorite crypto coin right now. It's obviously the granddaddy, so you want to keep an eye on it to hold 84, 85, gets through 92, that's much better. But I'm much more keen on the Ethereum trade right now.
Mish Schneider, Chief Market Strategist at MarketGauge, giving us a great look at the markets. Mish, we always enjoy it. You and the Modern Family folks, if you get a chance to check out her Modern Family YouTube page, she's putting some great education together for all walks of life in the markets. Thanks, Mish. We'll talk to you again soon.
Have a great day, guys. Thank you.
Mish setting us up with a nice segue to put up the Hive overlay, and can read a little bit here about Hive. This show, Pre-Market Prep, is brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive was on track to hit the 3% Bitcoin production by the end of last year. You can scan the QR code in the bottom right corner if you want to learn more about Hive. Also, there is a link in the description of this YouTube ad. It'll take you over to hivedigitaltechnologies.com. Thanks again to Hive for sponsoring Pre-Market Prep.
All right, still got that trading range in Bitcoin, and I bet no matter what way you call it, it's a trading range. So, and stuck right in the middle. So we discussed
just hung out down too long. Down here too long. I'm gonna make a call. I think Bitcoin's gonna break down. I think Ethereum is in trouble here too because they're just linked together, but they just hung out for too long down here. They don't give you a chance to buy the bottom for this long. It's 3 months. It's hung out too long, unfortunately. But we saw it with Lululemon. So there are examples where it can happen. Lululemon kind of hung out that bottom for like 6 months and then finally went. So support is support until it's broken. But if it breaches that support, that's going to be your trade. So on IBIT, you IBIT traders out there, 46.68. Yeah, that's $3 lower. So if it can breach that, that's your setup is to the short side. But I'd be scared to try to call this bottom here now. I mean, you can play anything. Support is support until it's broken. But it's hung out here for a long time.
A little bit of a preview here for this week, folks. We do get a Fed rate decision on Wednesday at 2 p.m. I'm looking at the CME FedWatch tool here. We are showing a 97% chance of no rate cut on Wednesday. That's kind of that. Also, of course, we are in the heart of earnings season, folks. I'm going to put up the earnings calendar that we have that Michael put together for us. We're going to take a look at earnings that are expected this week.
Yeah, pile of companies reporting. We talked about, today we had Steel Dynamics. We didn't get to the Steel Dynamics report. It is trading slightly in the red here. But tonight we get Nucor. So it's kind of like the steel day. But tomorrow we get Boeing. American Airlines, STX. We also have a conference for QBTS to keep an eye on. Wednesday, though, Microsoft, Meta, Tesla. Thursday, we get Apple. I thought Amazon was originally, but I think Amazon's got bumped to the next week, correct, Brentster? Because originally Amazon was looking this week, and I think
I'll look right now.
Amazon's next week. Sorry, mistakenly said Amazon was this, but Amazon's been bumped.
Thursday,
Visa,
February 5th.
Yeah. Visa, MasterCard, Lockheed Martin. We'll see how they do. Caterpillar on Thursday. Friday gives you SoFi, all you traders like SoFi, and the oil giants, Exxon, Chevron. But we are going to get 4 of the Magnificent 7 reporting in that 24-hour period, that Wednesday through Thursday.
Woo!
I would have to say, if you haven't done your free trial yet to the Stock Trader Network, I think you might want to make sure you're included Wednesday afternoon. When you have Tesla, Meta, Microsoft, those 3 reports, throw in IBM, which can always move $10-12. Southwest Airlines, which we didn't get to mention with the ice storm trades, and also ServiceNow. So, Brent, make sure you have a fire extinguisher next to your keyboard because sparks are going to be flying here, those earnings reports. So this is what the market's about, right? Earnings, right? Beats, no beats. And we will also be worry about guidance. You see what happened with that Intel, right? Oh, yeah, we beat, but guidance not good. And I don't know if we're going to get things right until 2027. Brent, you have any of the expected moves in some of these stocks?
Yeah, totally. So importance of the expected move. This is where options bettors are basically pricing in moves ahead of a major event like earnings. So for some of the mag here, including SanDisk, we have a 5% expected move for Microsoft. We have a 6% expected move for Tesla. We have also a 6% expected move for Meta. Apple, only a 4% expected move. The kind of mag addition that I will give here is SanDisk. SanDisk on, I believe, Thursday this week, a 15% expected move for SanDisk. I'm saying that dramatically, but people probably aren't that surprised that the expected move for SanDisk is like 15%.
Going to be some fireworks for sure. One more deal that we didn't talk about this morning, and it was at 5 o'clock this morning, was IONQ buying chip maker SKYT for $35 a share. It's interesting because you've got obviously IONQ, which is basically pre-revenue now, starting to look like, why not use your market cap for stuff here? I mean, jumping in here and buying it, and I believe it's a stock deal. I got to go look at the headline here, but IONQ to acquire Skywater Technology, creating the only vertically integrated full-stack quantum platform company. There's a mouthful here. $35 is cash and stock, actually.
Yes.
Applying equity value. Yeah.
$15 in cash and $20 in IONQ shares, subject to a collar.
That's always fun. So we'll get the details of that. We'll break it down here in the Stock Trader Network room, trying how to trade it here. But overall, you like seeing deals like in quantum space here and trying to work at stuff and looking at setting themselves up. I mean, IONQ. Many people believe this is best of breed. I think it is at this moment in time. Is it going to continue to remain best of breed? I mean, there's a half dozen of these companies, so who knows? But quantum is I think going to be for real. It's just a matter of when. So here's a company that's preparing itself and obviously looking at doing acquisitions here already, which is interesting when you got companies trading in this market cap. It's also interesting that it wasn't all stock. I mean, when you got these crazy market valuations, you'd think they do it in all stock, but they're going to maybe have to raise some cash to do that deal too.
Yeah, that's my question. Like, where's the money coming from to do this deal? Huh?
We got to go look at the details.
I mean, don't they have no earnings?
I don't think any of these companies.
They don't. Yeah, none
They're
of
all
these
pre-revenue.
have earnings. Yeah.
Yeah. It's not a matter of earnings, Joel. These companies don't have revenue. These are all pre-revenue. So it's not even a matter of earnings. There's okay, somebody's going to say, oh, yeah, they have $40 million in revenue last quarter. What are you talking about, Dennis? Well, it's a $17 billion company, with $100 million in revenue. So I don't know how much revenue that is. So, yeah, they're probably going to have to do a deal or something or raise some money here, I would assume.
Okay, we're wrapping things up at top of the show, and we're at the top of the pre-market session here. We've come all the way back into the green, bumping up against the highs for next week. And tune in tomorrow. We're going to have Pete Carmesino on. He
Nice.
works with Mark Chaikin over there at Chaikin Analytics. Pete does his homework, makes a lot of good calls on the markets. Hope everyone survived the weekend chill, but it looks like the market's warming up. Let's see if we can add on to these pre-market gains.